Oh, oh yeah. Well, we must be live because it sounds like my laptop here's about to take off. What's going on, everybody? It's Sunday, and thanks for joining me here on another wonderful episode of the Dapper Dividends live stream podcast. I want to say shout out to, I hope this isn't too, I've tried adjusting playing. I've been playing with the sound on this mic. Did a wonderful sit down convo with Haley Eich. Haley Invests. If you guys don't follow her, I didn't drop a link. You're just gonna have to look for Haley Eich, EICH, and really cool 27-year-old young woman from the United Kingdom. And we had a pretty interesting conversation. So again, I see all you guys in the chat. What's up, man? Hey, again, thank you for swinging on by the channel and spending a little bit of your Sunday afternoon with me and being flexible. Dude, it's crazy. Got a lot going on in my life. So I will do as best as I can, either on Saturday or Sunday, to chat with you and we can talk your ideas. I'd love to know what you're investing in, what you're buying, what's on your radar. Kevin, John, Luis, what's going on? So this is going to be fun. I'll give it another second here, and I'll kick it off with the epic portfolio update. I think you guys are going to like it. And I don't know, where you guys at with your market, not analysis, but what are you thinking? Haley and I talked about trying to stay positive when the market's down. And it's funny because now that it's starting to turn up, I kind of get the feeling like I should have went even harder when it was down. Yeah, we'll talk about that in a minute. Joe, I see you bringing up MPW suing Viceroy, which is really interesting because, as I understand it, if they're suing for defamation, it means that they're saying that they're reporting false things. And I assume they're going to make that known what those false things are. So, all right, we're up to 22 people. I'm going to go ahead and roll for you my portfolio update. Again, drop in the chat what you've been buying, what you're looking at buying. And you know what? It's a funny thing, but anyway, so here we go. Get ready, everybody. This is 40 seconds long. I want to say this is my epic portfolio update, and you will see on the bottom my patty and the number of shares and the average tranche that I bought. So here it is. The Dapper Dividends epic portfolio update, and away we go. What do you guys think? Come on, that was fun. I had a good time putting that together. It's a little silly, and okay, that's the epic portfolio update. But as always, click a link in the description below, and you can check out the portfolio at thedividendtracker.com, which is indeed right here. So there's the this is at Dividend Tracker again. One little bit of a knock against it is I keep getting disconnected from my Schwab account. So I have to keep redoing it. And I'm checking in once a week. And I did it this morning. So as you'll see, it still shows I have Algoma Steel. And as far as Nexstar Media, it shows that I'm still at 30 shares. So that one I had to reconnect. I assume that it will update a little bit later. Yeah, that's the only thing. I don't know why it just keeps disconnecting from the account. And everything else is good to go. When I look at the self-directed, you will see that I'm up to 210 shares of Aries Capital. And a really cool thing is that I received $81.60 from Aries and Dividends this week. bought 5 more shares. So that covered almost all those 5 shares that I added. And yeah, you can poke around this, look at what I'm invested in, but I'm hoping by tonight that in the bridge here, whoops, that the Algoma steel will be corrected. So just a bit of a heads up on that. And let me know, dude, what did you guys think of that? Was that portfolio update epic? Yeah, I'm sure some people are gonna give me a little bit of a knock on that, but dude, it was epic. I didn't lie. It's not clickbait, right? I did an epic portfolio update, so I'm glad. I see you guys enjoyed it, and yeah, I love it. And good stuff. Yeah, Luis, got to get JJ on I think that's an internal issue because it's right. So they use Plaid to connect the accounts, and I don't know why he keeps doing that. I talked with Ryan Williams, the one, the only Ryan Williams, and he said that he's had that issue too, where you have to keep going back in and reconnecting your account. So I assume they'll work that out, and I'm hoping they do work that out sooner rather than later. But at the worst case, it's still a pretty recent snapshot of what I'm invested in. And yeah, all right, let me go back to the top here and get through quick. I'll just say hello to everybody. I didn't see this. Was that Luis? Was that Ryan's live stream? I missed it Friday night. Had family, not even issues, just that's a weird thing to say. It's not a family issue. It's just family time, right? So unfortunately, I was not able to make that. Yeah, dude. Guadalajara. I get very I don't know, when I'm around native speakers, I tend to get a little more nervous as speaking Espanol, and I forget a lot. So those are what I bought. Yeah, Aries Capital really starting to build up a pretty big position in them. And I'd love to know exactly. We'll get to one comment. Who's buying T-bills? Here we go. Chris, you you just oh dude, 160K invested. Congratulations. And that is it's just awesome. Like, you have those assets, and hopefully some of those assets are spinning off income. Yeah, Shamir nibbled away at Toronto Dominion. I'm at 100 shares, and I don't know. I'm kind of content there, but I should be buying more, right? Because I was buying them when they were at almost $70 a share, and right now we're at 59. So it's still a discount. I think a lot of the banks have been hit, unfortunately. Schwab, I think, is still okay. Even if they relayed, the message that they were sending is even if all of their depositors pulled out, they would be able to cover that liquidity without dipping into any of the held to maturity assets that they have, any of those instruments. So you've been buying J&J, Devon Energy, Chevron, EOG, don't remember, SCHD, Vici, and O. Vici, I should have probably added more of them. They're interesting. I mean, we talked about Vici, that they might be buying or expanding into the experiential family part of the real estate sector, meaning like there was a rumor about them buying or potentially buying Six Flags, doing the OpCo PropCo, if you guys remember, where they would buy the real estate from Six Flags, and then they would lease that back in like a 15-year term called a sale lease back. They would be doing something like that. So interesting with Vici. I love it. And EOG, I don't remember what they are. 25 ALVOF, dude. Love to know. I'd love to know your guys' thoughts. I've never heard of ALVOF. Let's look up really quick. We'll do a bit of news here in a second. It is Alvo Petro Energy. Never heard it. Here, I'll just share this. I'll show you guys real quick. You can see what I'm looking at. Let's do this. Just share the whole screen. So Alvo Petro Energy, never heard of them. 10.47% yield, 200% dividend growth. That is pretty high. Sorry about this. Let me change this. I know it's lazy, but Where are they from? Oh, they're from Calgary. Okay. That is interesting. I don't know what these words are. Dude, guys, this is new to me. Kabure and Morukututu natural gas assets. Man, that's new for me. I don't know if that's Inuit. I don't know. Excuse me if I don't know. I man, that's interesting. I don't know what this is. The western portion, what? Two exploration assets comprising blocks 182 and the western portion of block 183 and two oil fields, Bamlugar and Maedalua. Guys, oh, Brazil. Okay. If I would just finish reading, right? So interesting. That could be risky a little bit, but another energy company. Yeah, I don't know that much. Free cash flow payout ratio only 55%. That could be interesting, but I think it's going to be cyclical. And so I'm just looking at their shares. Yeah, they're increasing they're diluting shareholders a little bit. And I don't know. I just don't know enough about them. I would definitely have to look into them. So my thoughts are I would rather just stick with Exxon and Chevron. I know them a lot better, but that yield certainly is enticing. All right, let me get caught up, and then we will do some of the news. Louis says the Fed seems like the Fed reduced their balance sheet a bit on Friday, plus the trend is going close to 50-50 on a 5% rate. I think it's going to be a quarter. Honestly, I think we're going to see a pivot at the end of the year with rates either freezing or starting to come back down. But as they've said, that's not necessarily a good thing, because if the Fed is cutting interest rates, right? Historically, if the Fed cuts interest rates, it means that the economy needs some help. Yeah, I think I got that right. I think I got that right. Let me think about that. Yeah, because that means they broke something. So the economy needs a little bit of help. They need cheaper interest rates to get things going. So I think so. Hey, Craig, what's up, man? The one, the only SCHD Stan, we found out that he lives near Tuomo Rutu, who used to play for the Blackhawks. A little bit of inside chatter there. John, thinking about buying VGI, and of course, VYM and SCHD. You know, I think Citizen of the Year, Cody, I think he just did a video on VIG, correct? That it could be better than SCHD. We got the man with the plan, Stan, on SCHD in there. I'd love to know what you think about that. Yeah, Luis bought SCHD. I joined you on that. VTI, Lowe's, Home Depot, RITM, I don't remember. Ooh, Annaly Capital. That's an interesting one. Did you by chance check out the Seeking Alpha article where I think it was Rita Morwa had compared Intel and Annaly Capital? If you would put the same amount into them, I want to say around 2013, 10 years ago, you would be much further ahead with Annaly, even after their dividend cuts, because they pay out such a high yield. And this has really been a mind shift for me and why I am buying more Ares Capital. Yeah, I think they're a little bit safer, but they're over earning right now because of the higher interest rates. So they've even said as much. Once those interest rates start getting cut, their CFO, Penny Roll, no joke, that you just can't make this stuff up. She's been buying more shares, but they've said they're over earning a bit. And, you know, we're going to see where the future goes, but they think they're going to be able to maintain the dividend. And I think they have a good amount of spillover. They do. So Kevin opened up a position in J&J, probably not a bad time. I did see that news that they're not going to be able to spin off the talcum liabilities into that, doing the Texas two-step. The nutshell explanation is companies take their liabilities, they spin it off into a separate company, they fund that company with a trust, say 2, 3, 4 billion, and then any lawsuit, any litigation can only tap into that trust, and it shields the parent company, so J&J in this case, but they're not going to be able to do that. So I think that's going to create more negative pressure. I think weak hands are going to sell. I still think, and I hate to say I hope that a stock is going to go down, but I still see J&J going to the low 140s, maybe even the 130s. And I definitely will be a buyer there. But, it kind of makes me think then, like, checking myself, like, but why am I waiting? Because I think in the future, I know they're going to be okay. But here we go. Yeah, Daniel, what's up, man? I bought some more Prudential myself. Not this week. I was buying in the 70s, and I am thinking about selling them if they get close back up to $100 a share, but we'll see. I mean, we'll see. All right, um, you guys liked my Epic portfolio update. If you're just jumping in, you can check back on that, or just go back in time, whatever. Rewind the video. We have the power of technology to do that. So let's see. I want to get caught up to you guys before we do a little bit of news. Let's see. Track your dividends has the same problem. So I just enter the info manually. Yeah, see, that's one thing I didn't want to do because I've just got so much on my plate. I really want something that just connects to my Schwab account and I don't have to worry about doing the manual entering because I did that for a while on DeGrin and I've stopped doing that. I probably should just delete those accounts, but yeah, I don't know. I just didn't want to do it. The game of the so this is in my editing software. I use Filmora, Wondershare's Filmora, and they have templates that make it look like they have one that looks like the metric or the matrix. They have one that looks like what else? Game of Thrones, Spider-Man, the Avengers. They have all these different things. So I may do something like that in the future. But yeah, and then they have the music. You can they have all these things that sound really similar, but they're not the exact music from that. So yeah, I thought that was funny. Have you guys heard of ETF moat investing in Morningstar stocks with Mind Moats? I have not seen that. I'm not familiar with that. I'd like to know if any of you did. Yeah, thanks, man, for that update. I thought that would be fun to do. I don't know. It probably took me an hour to put together. Not terrible, but I never did anything like that before. So let's see. Want to start saving real estate next year, so we may leverage on T-bills. Interesting. Is that real estate you're going to be buying in Mexico or the United States? Because I know that real estate, I don't know anything about it, but that's probably the discussion that will never die. How many of you guys invest in real estate as opposed to REITs, or I guess both? For me, for the time, and for a lot of, I know Bigger Pockets, they always talk about the benefits of owning real estate, and it's just, you can go back and forth. UC Escola on Seeking Alpha, Askola, I think is his name, has a lot of interesting stuff. He had a pretty cool article about why he got out of private real estate and only went into REITs. So I think you can do both of, I think you can go either way, but I'd love to know, what do you guys do? Do you like that? Yeah. T-bill's almost 5%. Let me answer this. Jark, where you in Norfolk, VA? Norfolk. I was stationed in Norfolk, as they say. I don't know if you guys are out. Anyone out there? Do they still have the Tommy and Rumble radio show in the mornings? Or is that just like way back in the 90s? So yeah, I was in Norfolk from January of 97 until February of 98. And then the ship I was on, the Stennis, we switched home ports to beautiful San Diego, Coronado, California. Man, I loved it there. A million times better than Norfolk. I'm sorry. Virginia Beach is nice, but it just wasn't for me. Norfolk. It's fun to say that. Technically, I'm not swearing because Frodo was missing. Yeah. That one, I guess I could have used the Frodo thing. Yeah, maybe next time. I don't know. Let's see. Oh, con práctica. Anytime. Yeah. Dividendos. Yo quiero. Yeah, yo quiero Taco Bell. Yo quiero dividendos. Lo siento porque mi español es un muy mal. It's very bad. My Spanish is bad. All right, let's see. Oh, this is awesome. Buying 3-month T-bills for money in my emergency fund. I was just talking about this with my mother-in-law. She has a pretty chunk of pretty penny in a savings account that's not really earning much, and she wants to get a little more yield, but she doesn't want a really long commitment. So we're actually looking at 3 6-month T-bills versus CDs. So any of you guys have an opinion on that? T-bills over CDs? And which, might be better. I don't know. That's something. Position maturity around October 2024. Here we go. Newbie. Welcome, man. I love it. Say I have 10 grand. Would it make more sense to put all of it into 4 ETFs, VOO, VUG, SCHD, and JEPI, or scatter it across, say, 10 plus dividend companies? For example, I guess that is banks. That's a bank down there, the emoji. That would be interesting. I got you, John. We'll get to it. So, yeah, Neil, that's going to be up to you. The main question I would say is, if you should be max. If you're in the United States, I would max out a Roth first and foremost, just because that money will never be. If your money is sitting in a bank account right now, like in a checking account or savings, I would max out a Roth, because that money will grow tax-free forever. But it's all going to be up to you. If you want to spend time to look at individual companies and you feel comfortable taking a little bit of more risk with an individual company, or if you just want to ETF it. So that's going to be your decision, but you can't go wrong with those. I mean, you can always sell out of them. You could spread it across those 4 and then, start siphoning money off to buy into an individual company if you'd like, and get your feet wet. But education, man, just put more into your mind. Just keep learning about the pros and cons of both is what I would say. And yeah, John, I will look into, I'm going to tell you what, John, I'm going to get to the bottom of the comments. I'm going to do a little bit of news, and then we'll check out Sunrun. Let's see. Love to know what you guys think about it. And NRG, that's gas play, right? Yeah, Supreme Court reject. Yep. Yeah, we just talked about I think there's going to be a lot of weak hands, and people are going to panic out. And I'll tell you why, John. I'm not worried about the lawsuits, because if you remember with the opioid issue, I don't remember the exact number that J&J was on the hook for. I feel like it was somewhere around 20 billion, and it's spread out over many, many years. So even if, then I've said that with 3M, if they get hit with a big amount of fines they have to pay, it's not all at once. It's going to be spread out. It's not going to be a bill due immediately. So that's one thing that I think is going to be good for them. Yeah, I got to get down. I got to get caught up. Let's see. Yeah, they means right. So if they're cutting rates, it means something's breaking in the economy. It's just not a good situation. But over the long run, just remember that things will be okay. Things will be fine. They always recover. I guess if you had all of your net worth in one company, then that would be worrisome. But the market will come back. It always does. J&J and 3M, different situations. A little bit, I guess I would agree with that. I mean, they both still are. 3M is 3 different lawsuits, different situations facing them. Yeah, I'm hoping to see 3M around 90. Let's see. Hey, well, you can call me Ross. I don't mind. It's actually Russ, but hey, I've been called Ross so many times in my life, it doesn't even bother me anymore. So this is my Luxor mug. Shout out to all you people out there in Vegas at the Luxor, or at the Luxor in Egypt as well, where I've never been. If you've been to Egypt, all right. Some of you guys like real estate, nice. Vici and then DCA into a Fundrise account. Interesting with Fundrise. I'd love to know what your thoughts are, because I understand that what they show your account value as might not be if you wanted to pull that money out. And I think it's gated, right? You can't just take out that money whenever you want, or can you? I don't know too much about it. Luis is going to be buying property in Spain and moving there once he reaches his lean fire goal. Cool. Your wife is from Spain. You better brush up on that Vosotros. I don't, I don't, that's one thing I'm not too, people who don't speak are completely lost at what I'm talking about. Nice. Frank's likes REITs. They're more liquid. Yeah, that's one of the things, especially I love about it, is if I wanted to change my mind, if I needed that money for something, I mean, we can just get out of it right away. Yeah, that's interesting. Rick, what's going on, Rick? Doing small monthly investments in Fundrise, but likes have a no. Yeah, I'd love to know, like, what is the benefit for Fundrise as opposed to just putting it into realty income, right? Because you still have fees and expenses, right? You're still paying somebody to manage it. So I'm not exactly sure like what the big benefit of Fundrise is over, say, a realty income or even a residential REIT that is out there. All right. He went to Kempsville High School, class of '84. Dude, you're an old guy. I was class of '96, so I don't know where Kempsville is. I'm assuming it's somewhere out there. Yeah, Louis says the dividends are the best. SPACs? Oh no, Frank. SPACs. I remember there was a fellow YouTuber that was the SPAC man. SPAC man. Free MPW stock. What's up, Cody? Yeah, you just did VIG, right? Saying that they are better than all right, I got to get some news here. Look at this. I just love this. I love hearing from you guys, hearing your ideas, what you're buying, why you're buying it. Jeremy's dividend stockpile. NEP, Next Era Partners. Yeah, I got to get Jeremy back on. Dude, there's so many people. And you know what it is? It's like you lose I mean, there's so many people that I talk to that I've gotten to know amongst all of you in the community. And it's just such a cool thing. Like I was thinking that when I was talking with Haley, dude, this is awesome. Like I'm talking to somebody from the UK, chit-chatting about investing, a little bit of dividends, different, nuts and bolts of what's going on. There it is. Money market mutual funds like SPACs. Oh, okay. So that was my question about my mother-in-law thinking about CDs or T-bills, but you're talking about mutual funds. That might be interesting, but I don't know if you can just buy those because that would have to be in a retirement account, right? If it's a mutual fund, maybe not. Don't take that as gospel. All right, here we go. I'm going to do some news really quick. I'm almost caught up, but I promised John we would look into Sunrun really, really quickly for him. So beautiful day. Is it a beautiful day where you're at? And even if it's not, you know why it's a beautiful day? It is a beautiful day because you are alive and you are in a phase of your life that, sorry, I didn't hide the comment. Apologize for the streamception. Oh, by the way, look at this. This is from Haley and I. We were talking. She recommended she's reading the Almanac of Naval Ravikant, A Guide to Wealth and Happiness. She said it's a fantastic book and it's given her a lot of wonderful ideas. So there you go. There's your book recommendation. And where were we at here? We're going to look up Sunrun, which is run. So John's interested. I see their trucks around here. I see the Sunrun vehicles. The vehicles. Okay, they don't pay a dividend, so we'll go through a quick mid-cap company. Negative free cash flow per share, and there are just an electrical component. So they're not. Yeah, they're losing more money, dude. Losing $13.50 a share. Ugh. Sales growth is up 44%, but that's just not translating right now. Total sales are still going way up into the right, but dude, look at that. In 2013, they had 9 million shares. Now they're at 219 million. So they're burning cash. They have negative return on invested capital, negative return on equity. Obviously, that negative free cash flow margin, negative operating margin, which is improving, But dude, they're losing 20. It's costing them money to bring in revenue right now. So that's pretty damn concerning to me that even though the sales are just going up and up, that they're still losing money. They're just not profitable. Yeah, net debt 50%. They can't, dude. I honestly, it looks risky to me, and I would stay away from Sunrun. Just, I'd rather just invest in a company that's already making money. And here's your intrinsic valuation: $15.54, and then the worst case, $14. So, uh, yeah, always look at that, man. If a company's not making money, you are speculating that one day they will. And I know NRG is profitable. I believe they are. So I've seen that name around. I wouldn't touch Sunrun, unfortunately. My opinion, hey, they could, solve the energy crisis and be worth $1 million a share next week. Anything can happen. Nobody knows what's going to happen, but that's just my thought. I would not invest in Sunrun. Jark02 was buying T-bills when they were moving up to 4.7 and 4.8, 3-month CDs. Okay, that's interesting. Rest of emergency fund is in SWVXX. That's one I have not looked into. SWVXX. Dude, I'm writing that down as soon as I find a pen. SWVXX. So I have our emergency money in Yada. And if you guys know Yada, they have the no loss lottery. And all that they're doing to do the no loss lottery is they take everybody's interest that would have been, like the aggregate interest from everybody, and they pay a small percentage, maybe like 1.5% guaranteed. But then the rest of that money goes into a pool, and they have numbers, and it's a lottery every night. And you can get anywhere from a couple pennies to $10,000. And it's just if you match the numbers. So I don't know. I've been thinking about looking for something else, but it's fun. And maybe that's the problem. Emergency funds shouldn't be fun. But I haven't lost any money. It's FDIC insured, so we're okay there. Quarterly on Fundrise. Interesting. But they state all through the website is not a liquid investment and is made for long term. Yeah. So if you're withdrawing early, I think you might be losing money. So there he is with the Vosotros. Yeah, I don't. God bless you. I have hard enough time with just regular old Spanish, regular Espanol. Let's see. Yeah, Darth does, dude. Darth is into Fundrise. I know that. Sorry, man. Yeah, I hope you know I'm kidding. You're not old. Dude. You're only as old as your mind wants. Sorry, I got an eyelash in my eye. It's stabbing me in the eye. Oh, look at that. AMT, new position, AMT. American Tower, right? They do so they're a company that owns the cell towers that Verizon and AT&T and T-Mobile will put their equipment on. But I don't think, you know what? Interesting. Since Lala was looking at it, let me take a peek at them with you guys. Let's look at AMT and see what they're all about. See what they're all about there. AMT, American Tower. Move that over here. So 3% yield, which is way above their 5-year average. Let's get a look at some of their financials. During the last recession, down 30, their sales went up. Okay. No dividend was paid during the last recession. That was interesting. So yeah, really nice dividend growth. 21% 10-year CAGR. So they're growing that. Let's see. All right. April 13th is the ex-dividend. So if you hold them by April 12th, you can get $1.56 a share. What do we got? Interesting. Now, again, these are all lagging numbers. This tells us nothing about the future when we see the dividend yield is 53% above the 5-year average. And the forward price to adjusted funds from operation, which is like the PE for REITs, is way below. And yeah, interesting. Let's see. Their AFFO payout ratio, it's climbing up, but it's only 63%. Not bad at all. Let's see how much they're diluting. Sales growth 14%, still nice. Shares outstanding, just very slight dilution. Most REITs, remember, it's okay to dilute shares if they're plowing that into the business to grow the business, to increase the sales, which they are doing. Yeah, just they look solid. Just nothing to worry about. Nothing. 29% operating margin. 78%. They have a little bit of debt there, so a little bit of debt, but AMT, that would get my stamp of approval. So looking good, looking good. All right, let's see. Evaluate bank stocks. Yeah, that's interesting. They just talked about it on the Motley Fool podcast. Uh, you have to look at, like, one of the metrics I know and I like to look at is if they are gaining depositors, what that looks like if they're growing. Sorry, I assets under management, is that growing? There's, you know what, that would be a good video to make. How do you evaluate bank stocks? Not my forte really. So I definitely need to learn more and be better in evaluating bank stocks. And hey, we've sure learned a lot, right? If they're held to maturity securities, right? If those are what that shape looks in, how much of that they have, how much of their deposits are FDIC insured. That's a big one, because if not a lot of their depositors are FDIC insured and there starts to be a little shakiness, dude, people will pull their money out. And that's the biggest thing, the biggest fear with the bank is if you have a run on the bank, they're toast, right? So those are a few of the things. I'm glad you say that, because, well, I don't know about all experts, but um, yeah, I wouldn't say don't. Definitely, I wouldn't agree with that, buddy. But there's things you can look at, and that's a good idea for a future video. I like that. Big banks are safer though. We usually think they're safer, of course, but hey, there was some Bear Stearns, right? Uh, NEP metrics look great. Yeah, what do you guys want to know about? Is there anything you want to look up? Let me get caught up with you here. Solar energy, go with Enphase. Yeah, I would. That's a great point, Rui. Right. God bless it. Sorry, I got like a eyelash stabbing me in the eye. This is a fun one, but um, what was I saying? Yeah, I would just go with a company that makes money. To me, it's just too risky. Sunrun's been around for a while now, and they're just not profitable. I mean, it's not even close. It's getting better, but I mean, getting better from your house being on fire to just being kind of smoldering, and I don't know. It's a bad analogy, but anyway, use PNC. You know what? That you can't just look at it, because remember, right? People use Silicon Valley Bank and thought like, hey, I use this bank, I can buy them. So that's kind of tying in with Peter Lynch saying, like, you can use it for ideas. Do not ever just buy a business or a company because you use them. You can use it for an idea generation and then to look into them. But yeah, that's kind of it could be a big mistake just buying something because you use it. Like Blockbuster Video. Shout out to all of you guys who remember Blockbuster Video. Who remembers going to the video store and wanting a movie and it was all out? I remember those days. I remember waiting by the counter for people to return stuff and hoping that it was going to be, they used to line them up, what came back, and you'd be like, like looking over the titles. People would drop it in, they'd scan it in, put it out. Anyway, it was crazy times, dude. Such a better system right now where I can just pop on anything I want on the TV. Beautiful. Yeah, check out Motley Fool in your podcast player. Go to Motley Fool, and it was the Friday or Thursday episode. They talked about 3 banks they liked. I think I forget the person's name, but one of them was Ally, one was SoFi, and I think one might have been Fifth Third. On Seeking Alpha, Brad Thomas just did an article. I think he said even backing up the truck on Schwab, Fifth Third Bank, and US Bank, ticker USB. He said he likes all those 3, gave some pretty interesting reasons why. So, oh, yeah, NRG. You know what? Here, I'll just tell you this. Let me look. I'm going to look NRG right here. I'm just going to put it in. NRG has a borderline dividend safety score of 48, but they're paying a 4% yield. And I will bet you that they are profitable. Their earnings payout ratio is 22% on NRG. They're earning $6.89 a share. There's shares outstanding, 236 million. They're actually buying back shares and they have an 18% return on invested capital. They're making money. They're profitable. Profitable? They are profitable. So yeah, I would easily go into NRG instead of Sunrun. Just my opinion, just because they're a profitable company. Profitable. SWVXX. That's what I wrote down. I thank you for sharing that one. I do appreciate that. We will be looking into that. So expensive 0.34. Yeah, good. These are good points. These are things we're weighing. T-bills are zero, no expense, but you do pay federal tax, right? Yeah, you don't pay state. Interesting. There, thank you for helping me out there, Steve. Schwab gives NRG a B. I love it. What else are you guys buying? Jason's been buying T-Row and UGI. Oh, Fast. Is that Fastenal? I do believe we have exposure to Fastenal in SCHD, right? AMT was 192 last week. Should have pulled the trigger. Yeah, I don't know if we'll get second opportunities, but it does feel like things are starting to change. Like the pivot is going to come. Like it's on the horizon. It doesn't feel as dark and gloomy as it once did. And they say before every recession, the stock market starts going down. And then before the recession ends and is over, the stock market starts going up. So that's the thing we have to remember. And this is why I love talking with you guys, is because it's just, we don't know. Nobody knows the bottom. There's no dude like ringing a bell saying, all right, we're at the exact bottom, everyone start buying. So we just don't know. It could get worse. We could have seen the bottom already. We could be way up on our way to the tippy top. We just don't know. That's why I think about when I'm buying something, I make my peace with it. And if I'm comfortable buying at this price with the information I have, because obviously nobody can predict the future. So because we don't know the future, man, there's just no way to know. So you got to be comfortable. And I thank God I'm not trading short term. So, all right, good spot to enter. I don't remember what we were talking about. What were we talking about, Rui? You bought, I can't find what you bought. There it is. AMT. You think AMT is a good spot to enter. Cool. You are welcome, Lala, for checking that AMT. I'm happy to do that. Yeah, Gary, you want to look up, is that Sonoco? Here, we'll look up that. Let's see if I can do this. Share my entire screen. I don't want to get caught again. You know what? Let's do some. We didn't do news. There's a little bit of news here, and we'll just do Simply Safe. Oops. Come on. Work with me. We'll do a little bit of their news. What was Monday, the 27th? So this is just Simply Safe's things. They downgraded Micron from 80 to 60. Again, this is their opinion. They give Nexstar Media a borderline dividend safety score. I completely disagree with it. So again, take these with a grain of salt, but could be something worth looking into. They give Micron a downgrade to 60. And Viva, they gave a downgrade to 40, but they do have a 12% coal and consumable fuel company. Never looked into. Gorman Rupp, solid company. They give them, they're 90 years old. They gave them a downgrade to 80. Lincoln, we've talked about Lincoln Financial before. Lincoln National, they downgraded them to 40. That is something some of you guys should look into. You know what I mean? But their yield right now, 8% for a bank. That's pretty high. What else was here? This mortgage REIT, the M REIT, Granite Point, downgraded to 20. Looks like they cut their dividend in December of 2022, 20%. More downgrades, dude. It's like Oprah, right? Just you get a downgrade and you get a downgrade. Everybody gets a downgrade. More office REITs. They're getting hit. That's a sector I'd be worried about. OPI, office properties, which owns, look at that. 11% of their rent comes from Chicago office properties, almost an 18% yield. Crazy. Brandywine, another office REIT, downgraded. And MPW, they downgraded to 40 because they sold their Australian assets. But somebody in the comments, and I was reading a few people that said this is a really beneficial thing for them that they're selling their Australian properties. But I don't know, man. I just see a lot of selling going on from real. Stop it. All right, awesome spam call. Perfect timing on a Sunday. Um, what was I saying? I thought I had that muted. I don't know. Completely broke my train of thought. Yeah. So what I see is that it looks like they're selling property and raising cash and then funneling that to their tenants and making equity investments in them. But here we go. Yeah, Kilroy, Ryan, poor Ryan. They downgraded to 60 because of their exposure to office property. So Kilroy was downgraded, and then Douglas Emmett, another office REIT. So they're just downgrading all the office REITs, and that's and then Lowe's. Lowe's was declared their next dividend. This should be their last one before a dividend increase. So will be interesting. They've had some pretty hefty dividend increases, Lowe's has, and they look, I know Ryan was buying them. Yeah, 20%, 25%, 20-year CAGR. And interesting. So what was that last one? Sorry, guys. You're like, stop moving it. 31% dividend increase in May of 2022. So next month, they should have a pretty hefty dividend increase once again. And those shares go ex-dividend on April 25th. And one more thing to look at here is, the free cash flow payout ratio, only 37%. So pretty low. And what was, I was looking at Sonoco for my buddy here. We'll look up really quick. I don't want to bore you guys to tears here. Sonoco dividend safety of 69, 3.21% yield. Let's go quick here. Dividend growth, 4% 20-year CAGR. So not breaking the bank, 40-year uninterrupted dividend growth streak. So they're looking like they want to be dividend kings in the near future. Getting ready for a dividend raise. Looks like it. $1.96 per share per year. The yield is 6% above the 5-year average. That PE is way low. I need to know why they are such a low. This isn't good. They're a packaging company, but a 104% free cash flow payout ratio. It's come down. I'd like to know if any of you guys know why it's so expensive or why it jumped up like that. I'm guessing just because the free cash flow per share has dropped down, but that's not a good sign. And I would be worried about that. Now, they haven't cut the dividend for 40 years. They've been increasing it for 40 years, but they may take on debt to try and weather that storm. And let me just see. Very good return on invested capital. They don't look terrible. Yeah, free cash flow margin 0. Yeah, their net debt 62%. So it looks like their net debt has jumped up. So I would be worried, and this is interesting, guys, that and I'll get you a price on them. That would be interesting to see if they're going to take on more debt to cover that dividend to keep that. Come on, SON. Oh, finish it. It's like auto completed. All right, Sonoco has a intrinsic value of $74, so about 18% undervalued. And then on the worst case, we have, come on, slow ass computer, 60. So they're about fairly valued on the low end. Yeah, it looks interesting. That I'd really need to dig in and find out why their free cash is just dried up. Why is that? You know what? Ally looks good. I know there's a lot of people buying it. Harris likes it. So from what I understand, there's good sentiment around Ally, and there's analysts that are buying Ally. So let's see, rented video games at Blockbuster. Yeah, man, me too. Shout out again, and for all of you, for all of you who don't remember renting games at Blockbuster, be thankful that you could just go and now you just download games. It's crazy. It's crazy. Yeah, never bought Blockbuster stock. Hey, some people did buy Blockbuster stock. Funny story is that Blockbuster could have bought Netflix for pennies, and they just thought like, nah, you guys are dying. You're not going to go anywhere. We're just too huge. Is it Reid Hoffman? Who is the founder of Netflix? His name escapes me, but he had a personal vendetta against Reed Hastings, right? Is that it? I think Reed Hastings had a personal vendetta about, he's like, because he wanted to cash out. He wanted to sell and get money from Blockbuster. He's like, we're going to take them down. Blockbuster will fall. It like was his personal vendetta. And Be Kind Rewind. Yeah, man. I used to remember they had rewinding machines they used to sell. Let's see. Oh, Buck Stops here. A new face. Thank you for swinging by. Don't invest in bank stocks. Doesn't put money into banks. Don't invest in banks 3 years ago. Well, yeah, some of the smaller ones for sure, but the bigger ones like JPM are still okay. They've been fine. They've been weathering the storm pretty well. I know the European Dividend Growth Investor YouTube channel. Check him out. He does not invest in banks as well. He doesn't like bankers. Yeah, watching the trends. All right, I want to get caught up. Sorry, I apologize if I am skipping. What's up, Trevon? Stanley Black and Decker and Scott's Miracle Grow. I would be more leery of Scott's Miracle Grow. I think that's a management issue from what I understand. Stanley Black and Decker, things are going to right the ship. They're a solid company. I'm not worried about them. I love it. That thought. You've been buying NRG. They're also in SCHD. There's a lot of stuff in SCHD. Fantastic. All right. I want to get caught up here because we're getting close. And yeah, let's see. Who's got something good to say? I love it. OJ bought 600 shares of British American Tobacco and 200 shares, of Altria, and 600 BTI, 100 Mo, 200 Bank of America, and 25 CI. I don't know CI. I know Citigroup is C. Let's see. What's up, Rocco? Again, I apologize, you guys. If we'll go a little bit long. I want to talk to you guys. He's been buying SoFi and San. I don't know San. Strongest European bank. Thanks for sharing that. Doing buybacks and committed to increasing the dividends and shareholders. Interesting. That's a company I need to look into. What is the name of? I'll just look it up. So yeah, San. I don't know. Where are they? You say they're European. Oh, here we go. Banco Santander. 4% yield. Interesting. Yeah, everyone put San on your watch list. Did you like my watch list video? That was kind of silly. I was like, well, Medifast does sound like a weight loss cult. So I don't know. I don't know. I don't know what I don't know because I know that I don't know what I don't know. You know? What? Exactly. Let's see. Lala, Kevin, you shared the portfolio with friends and family. I don't understand it. Yeah, it's a lot of people. I talk to people that I know, and their eyes glaze over as soon as I say investing. I'm getting caught up to you guys. Here we go. Wait, what is it? What's your ringtone? My ringtone too. Kevin, tell me again. Put it in the comments what your ringtone is. I'm trying to remember what I used. Not Pee-wee, is it? He increased lows. Yeah, it's interesting. I sold Algoma Steel. I should have talked about what I did, but I really do like Nexstar Media. I think once the presidential election rolls around next year, they're going to be flooded with cash from all the advertisements, and their election years too. Their coffers get filled. They take that money, they reinvest into the business, and they keep growing the business. That's why really good model. I really like Perry Sook, the CEO, just a solid company. And I just wanted to consolidate more into a high conviction play. So that's why I've been selling off some ancillary positions in the portfolios just to do that. Just my personal oof. Lucid, I yeah, I'm not gonna look at I just know that they're not they're probably another one that is it's something I wouldn't invest in. I know they don't pay a dividend, but um LUCD, a dollar, dude. They're a penny stock. They're a penny stock that if that is the ticker you want it, here, I'll show you guys. You know what? Screw it. Why not? I'll show you. Or LCID. I'm sorry, I was at the wrong one. I put in LUCD. Duh. LCID. Lucid, yeah, Lucid Group. I thought they were the EV, right? Isn't that the one Munger invested in? They don't make money. They're starting to get better, but they're negative. Negative earnings per share, negative free cash flow. They're diluting shareholders a ton. Okay, here, I will show you guys this just because this is something that I personally don't like and wouldn't invest in. And I want to show you why I would not invest in Lucid. So, first off, yeah, it's $8 a share. Okay, that's fine. But free cash flow is negative $1.97, earnings per share negative $1.33. See, it's getting better. They're not losing as much money, but they're still not making money. Sales is only up 2%. And this is a big one right here. I mean, they went from 740 million shares in 2021 to 1.69 billion in 2022. That is just sickening to me. What are they doing with that money? Because they're still burning cash. It looks to me like they're diluting shareholders because they need to keep getting cash. Like, you can't just keep doing that. Just negative return on equity, return on invested capital, negative. Everything's negative, and yeah, I'm sure they have debt. This shows no net debt to capital. Obviously, we've had issues with Simply Safe if you watch the last video, but yeah, I just wouldn't, guys. I wouldn't invest in this. It's just too freaking risky for me. They're not making money, and we don't know when they're going to make money. Yeah, you're speculating that one day they will. I would just rather invest in, here we go, Lucid earnings. Yeah, and it's fine. And like I said, I am thinking differently about buying companies that don't pay a dividend. Been looking at Harrow Health. Talked about it with Haley for a minute. But, all right, let me see. I'm getting caught up. Things at Chicago. Oh, you coming next weekend? Oh, so that's why you asked. Yeah, busy. Freaking busy. Beautiful weather today. We're going to have a little bit of a family something after this. I don't know. We're going to eat and do what we do, man. That's part of it. You just spend time with your family and friends, and make friends. If you don't have any friends, you can. SoFi is in growth mode. Right. Yeah, and that's the thing. And that's where I'm getting to. All right, here we go. We're pretty much live. Added to Tyson Foods, management improving. How is management improving? I haven't kept track of them. The kid, right? He's the CFO, I think. The one that was, what was he, like, drunk and naked in some buddy's house? He broke into a house and went to sleep in somebody's bed. Crazy stuff, dude. Adding SCHY. I don't remember SCHY. Let's see. What do I think about MPW lawsuit? Yeah, I briefly touched on it. I think this is what the market wanted to see. And one of the reasons why they're raising, because as I understand it, it's an anti-defamation lawsuit. And if you're suing somebody for defamation, not anti-defamation, that doesn't sound right. It can't be an anti-defamation, right? Because then you would be suing them for not talking bad about you. That's a bizarre world. Yes, we'd like to file a lawsuit because this group has not been trashing us and making up lies, and we just don't like that. We can't have that here. But the defamation lawsuits, that means that they're saying things that are untrue, that are hurting the company. So I would assume if you're going into a court of law and you have things that you have to prove what they're saying is not true. So that will be interesting. Again, I have no position in MPW, and I honestly do hope for all of you that are invested that they make money, that this is all smoke, This was an unfounded short report attack. Like I said, I did that video. I did my own opinion, looked at it, but from what I can tell, just from the 10K, not thinking about the short report, not thinking about anything, trying to be impartial, just on the numbers that they report and file with the SEC, it just looks to me like they are selling properties, taking that money and making equity investments in their tenants, of which a couple are struggling. So, it doesn't look good to me, but we'll see. I hope I'm wrong. I really do. I want you guys to make money. T-bill ETF like SGov. I've actually never heard of SGov. And I am going to look into that for my mother-in-law because she's looking at trying to put that money from a savings account. She's got some money and wants to be getting a little more interest on it. Paulo, what's up, man? Think about Disney. Their intent, right, to pay a dividend in the near future, maybe the end of this year, I think is the rumblings, the chatter that I've heard. But they're not going anywhere. They're strong. I know people wanted them to spin off ESPN. I don't think they're going to do that. All right. A couple more here. Where do you go? Palantir. You guys, Palantir, another one. They don't make money. Last time I looked, I mean, unless something crazy changed, it's been a few months since I've looked. But again, they don't make any money. They're not a profitable company, right? You want to look it up? We'll look it up. Here we go. Let's maybe third time is the charm. We'll see if Palantir is profitable. There it is again. I'm going to have to make a shirt. Are you profitable? Another $8. Let's see. Okay, free cash flow per share. That's good. It's come down. They're actually making money. So see, I stand corrected. 20 cents per share. Earnings per share growth way up. Sales growth 24%. Yeah, it's still a little bit of dilution. They've 2018, 544 million shares, and now they're at 2 billion shares. I mean, that's a lot of dilution. Their sales are going up. Still though, return on invested capital and return on equity are both negative. That's not good. Operating margin is negative, but it's gotten better. I mean, I don't know. I guess that they could be a lot better. At least they're profitable right now, from what I can tell. And we don't have, I don't think, an accurate debt measurement there. Yeah, I don't know. It's just too risky for me, in my opinion. And that's my opinion. Oh, duh. That's because my phone rang. Radiate. Yes, some scam call called my phone a minute ago. All right, I'm gonna get a few more here on you guys. Let's see. TSN was reducing costs by closing their non-efficient plants. Cool. I didn't know. The naked drunk founder's son in someone's home sleeping will be in the past. You're right. It will be in the past. And we'll just hope, man. I hope for you that things work out well. And I think I have Tyson Foods in an ETF. I'm pretty sure in one of my IRA funds. PepsiCo, I think, is indeed a little overvalued right now, but we've talked about it on the podcast where I said they were if you would have bought them in 1994, I think they were like somewhere around $20 a share. And somebody like me came along and was like, yeah, look they have a value of, I don't know, $10. It's too overvalued. I'm not going to buy. Well, if you look ahead 10 years, 15 years, this might look like a good price. So we'll see. Yeah, Intel looks like they are starting to turn around a bit. I'm not buying any more, but I am going to stubbornly hold until I get back to almost break even with Intel. And they, yeah, nice. Almost 60 viewers. You're right. Thanks, Patrick. All right, what's up? Couple more. Let's see. Pepsi. Here, I don't even know the intrinsic value, so we'll show that on PepsiCo. If my voice holds out. Let's see. So one of the all right, there we go. One of the bugaboos about Pep is their payout ratio is pretty high right now, and it can be high for a little bit. Let's just show it. So they're just not. They're dividend king, yes, but what was I going to show you? Yeah, the free cash flow payout ratio, 111%. That's no bueno. That's got to change. But as far as an intrinsic valuation, I don't remember what I shared here. Let me see. I get better at this. This soul guy. There we go. This is what I want to do. Pep. They're like, well, I watch Ryan Williams and he doesn't have these problems. I tease. He's one of my guys out there. I know Ryan Williams. All right. So they have an intrinsic value of about $161 for the base, and the worst case, about $130. They've just weathered this storm really, really well. And I don't think insiders have been buying. I'm curious what shares are shorted. Yeah, look at it. A lot of people have been selling. And I think these include restricted stock units as well for the sales. But that's interesting. Nobody's been buying. Let's see if LaGuardia's sold. Ramon sold 1 million shares in. But again, these could be restricted stock units. And let's see. Look at percentage of shares shorted, 0.73. So really nothing out there. Anyway, so let me see. Let me get caught up here. A couple of yous. Great weekend, Lala. Yeah, Lala, we're going to get out of here too. Last one. Who wants to be last? Last. Thinks Intel was at 52. Yeah, I bought some Intel at 54. I hope they get back there. And again, I will wrap up with this. This is the benefit of dividend stocks. As long as they don't go out of business and there is a recovery in the future, it stinks being down quite a bit, but we're going to get paid to wait for them to come back up in share price. And it's okay, man. We love it around here. The whole name of the game that I'm investing for is to buy companies that pay me income where I can reinvest that into more income producing assets, never have to touch the principal, and one day try to live on as much as I can on the interest and just pass those businesses on to my kith and kin, to quote my friend Clark. And who is that? That's Clark Griswold. Clark, we love you.
Thank you, Russ.
I think that was the Russ one. I don't know. I didn't name it. So anyway, dude, thank you all for joining me. Once again, we're going to play my Pee-wee role because I love them and it's my channel. Let's do what I want to do. Would love to know your thoughts on the Epic update. So guys, we'll talk to you next week. Maybe I'll get a guest on. Maybe I'll have Harris swing by and join the show, or Ryan, or the both of them. I don't know. We'll see. Love it, guys. Thank you, everyone, for swinging by. Once again, I truly do appreciate talking to you and hearing your thoughts. Thank you for sharing your T-bill and thoughts on those funds I'm going to look into. So have a great rest of your week, everybody, and let's stack some of those dividends.